Joining me now, Jim Chadwick, the president of Ancora Alternatives. And Jim, it's great to speak with you again. The last time you and I spoke was in the midst of your activism battle, investor activist battle with Norfolk Southern. And a whole lot has changed since then. So let's start right there with this proposed merger, or acquisition, I should say, by Union Pacific.
Great. No, it's nice seeing you again, Morgan. Honestly, it's amazing how fast the time has actually transpired since and all that's gone on. But maybe just taking a moment to rewind here, it really was just 18 months ago when we first got involved here with the company. And I think there's probably four characteristics we'd say that maybe, best describe Norfolk Southern at that point in time, which was, poor safety, poor strategy, poor leadership, and obviously leading to a poor stock price. But, and you think about all the changes that have occurred starting from the proxy fight onwards to where we are today. I think today, as you look at the company and why it's so attractive, now you'd say there's strong leadership under Mark George. Mark Smart's done a great job. He surrounded himself with really good operators. Strong safety. Their safety record has improved significantly since that time. And now you have the right strategy, strong strategy. So now they're running a PSR railroad, which they weren't before. And you can see it manifested in their improving ORs and improving results.
So as a shareholder, you're on board with the plan to merge and create a transcontinental railroad.
Oh, we're totally on board. I mean, we think this is exciting. Look, it's the opportunity now as we sit here today for them, for all the investors for Norfolk to effectively invest, at $320 a share is what's been offered for our shares, and now we have the opportunity to invest in this transcontinental railroad led by, who we consider the greatest railroader of this generation, Jim Vena. Which, whoever thought when you talk about 18 months ago that now we'd be in a situation where we have these combined companies, two great operators getting together here and led by the greatest operating railroad executive in the world today.
Yeah, as a result of your activism last year, there are a number of independent directors on the board who are tied to Ancora, or who you put forward as nominees. Did you have a hand in this deal coming together?
We signed a cooperation agreement with the company back at the end of last year. So, I mean, when you look at the directors, I'm trying to answer that question very carefully. I mean, I think all of it kind of goes hand in glove in terms of what happened that got those directors on the board and how we find ourselves today. Some of which were very deliberate steps, like a proxy contest and seating new directors, and obviously what happened there with the CEO, with Alan Shaw and Mark George stepping into place. But I think there's unforeseen factors that played a huge role in this. Obviously, the election. I think Donald Trump becoming the president, and we saw firsthand with our campaign against U.S. Steel, really what it means. In terms of when you have a president that has a vision that wants things that even in that situation where CFIUS had actually rejected that transaction. Because I think where Trump wanted to go with the domestic agenda, particularly with insourcing and manufacturing. We saw obviously what the final outcome was with U.S. Steel. I think this deal's even better than that in terms of how it benefits the country and as a whole. So, look, I think the people that were put in place. It's back to your question, but William Clyburn, one of the directors that was seated as part of our campaign, former vice chair of the STB. Obviously, that's a great fit for what's happening here today. Gil Lampier, arguably the most experienced public class one railroad director there is. He's been on almost every board that's existed. He's seen pretty much everything in this space. And Sammy Fahmy, who's a highly experienced operator that was also seated that, has actually done PSR implementations, was actually there during the last merger that happened in a railroad between Canadian Pacific and KCS. And of course, and then part of the settlement, Lori Reichert joined the board. And Lori, we know, has been a great contributor as well with her senior experience. And so I think all these components, even the additions of Richard Anderson, Heidi Heitkamp, which came about during the proxy contest, all these things together and collectively have put the right people in place to actually make this possible. And obviously having a president that would be open to this type of a transaction is a game changer.
And the STB has certainly signaled that they're willing to review M&A activity and maybe even perhaps put some things in place to do so in a more expedited fashion. So how do you assess the regulatory risk of this, especially since it is going to take a year and a half, 2 years to get across the finish line nonetheless?
I think first of all, I mean, we have to assume in conversations I've had with both Mark George and Jim Vena, we know that they did a lot of work on that going into this. They knew that the regulatory was going to be an issue and something they had to navigate. So I do feel some comfort knowing that a lot of this has been has been analyzed greatly. I don't want to say vetted already, but you know that they had a great degree of comfort going in that they get the approval. With the STB, this isn't the STB that existed under the last administration, the Marty Oberman STB. This is a totally different STB with Patrick Fuchs now, and Patrick is a guy that we think is a lot more pro-business, commercial oriented. Obviously, used to work for John Thune, who's a very close personal friend of the president. Even you look at the Department of Transportation, you know, Duffy is very close to President Trump, as is his wife. And so I think, I think all roads lead through Trump here and the STB. But ultimately, today you have this 2-2 scenario: 2 Republicans, 2 Democrats. As far as the current members of the STB, Trump will be appointing the third, which will be a third Republican, and obviously the Republican control on the STB at that point. So I feel very confident that this merger will get approved. I think so does obviously the company it's involved, but it probably played a role maybe a little bit in the stock price reaction yesterday in terms of, people assuming this is going to take longer than expected, and there's some uncertainty on the approval side. We think it's actually going to be shorter than I think people expect. I know the company has said 22 months. I think they can do it faster than that. I mean, we've seen a like from out of the STB a merger approval process, and some of that timeline they've shared shows that this process could move much quicker. And obviously, once the president gets behind it, if he does, I think this happens.
You took my next question out of my mouth, but I was going to ask why you thought Norfolk Southern had been trading lower on the deal announcement when we got it on Tuesday. And I've seen analysts point to the lack of a voting trust and the reverse termination fee. And to your point, skepticism about going through the regulatory process, even as we see some unions, or I guess really mainly one main union, come out and already voice their opposition to the deal. Were you surprised? Were you surprised to see the investor reaction, at least initially, in the stock?
Maybe a little, just at the time it happens. The deal's at 320, but obviously, look, I mean, this happens in these types of situations. I mean, I used to work at Relational Investors with Rob Whitworth, and we had situations like this where he'd say this, stock's shaking off the weak sisters here post-announcement. I think some of that is the first thing to go. And on top of that, you have a lot of short-term ARBs and others that are looking to make a quick buck. And I think where this lines up now is really long-term versus short-term investors. And when, I feel really good about it. We're buying stock here today. And look, I think if you think about what the opportunity is here for Union Pacific and obviously Norfolk Southern, but if you're buying Norfolk Southern shares today, you're buying them at a discount. Effectively, it's the cheapest way to purchase shares of Union Pacific would be buying NSC here. So, if you're interested in the long-term opportunity here, which I think is significant, the synergies that were outlined yesterday, we honestly believe are very conservative. The $2.75 billion that they had mentioned, I mean, Kansas City Southern had $1 billion of estimated synergies in its merger with CP. That's Norfolk Southern's 4 times the size of Kansas City Southern. So I think that the synergy number is significantly higher than what they're saying, and so the earnings accretion opportunity is far greater than 20%. Look, I think as a long-term investor, this is probably going to be the second largest industrial by market cap in the country once it closes, and this is going to be a must own stock for a large part of the market. So I mean, we're really excited about this. We're looking at this from the long term, and we're still a buyer, like I said today.
Do you think we're going to see more deal activity, be it BNSF merging with CSX or something else?
I think that's very possible. I mean, I think there's an assumption that BNSF will have to take action, and so will CSX. I mean, obviously we're interested in the situation. We've been a growing shareholder in CSX, and I think that company finds itself at the crossroads too, where it has to make a decision of whether it wants to find a merger partner or whether it's going to have to go retool management. I mean, Joe Heinrich's been there now for several years. The company's been underperforming, and prior to his tenure there, they had a sub 60 operating ratio. Today they have the worst operating ratio of all the publicly traded Class 1 rails. So, our view, and I've talked to Jamie Boychuk, who we worked with on the last campaign, but quite a bit about CSX and analyzing what can be done there. But I think something will happen there, or it's going to have to happen, for them ultimately if they, if they're looking to maximize value for their shareholders.
Are you considering a campaign against CSX management?
I think that'll be up to CSX ultimately.
Well, you're talking to them.
No, meaning like whatever actions they make from here will dictate what we do. But I think they'll do the right thing. I mean, if they don't, then certainly, I mean, we'll be looking to maximize value.
Okay. I want to go back to the union piece of this because you have relationships with the unions. Have you been surprised to see some of that knee-jerk, immediate opposition to this deal?
No, I mean, from what I understand, look, I think it's taking a step back on the unions. I mean, you're right. We do have union relationships. They actually, 50% unions that represented approximately 50% of the unionized workforce in Norfolk Southern actually supported us publicly during the campaign. And so Ancora has had a long-term relationship with labor unions and managing capital for labor unions. And so, we're big supporters. Obviously, we were as well in the U.S. Steel situation. I think this is just par for the course, to be honest with you. I mean, in a merger, and this is, I think, fairly typical in these rail mergers, that you'll see the unions come out initially against, and ultimately they'll work out some arrangement here to get to a deal that makes everybody happy. I'm highly confident in the end that'll be exactly what happens here. Both CEOs yesterday already said they're committed to preserving every single craft job or every single union job here. So and ultimately, really, I think what's so exciting about this is, the job creation opportunity at Transcontinental Rail creates is this not only preserves union jobs, it's going to create new union jobs, and I think the unions are going to get really excited about this as it starts moving forward. But I do think part of this is politics or negotiating tactics, and I wouldn't be surprised to see some more of that. That does not concern me at all,
okay.
Really.
Yeah, and certainly Jim Venna and Mark George both said as much when I interviewed them on the heels of this deal announcement as well. You mentioned U.S. Steel. We haven't spoken since that campaign came and went. I do want to get your thoughts on how all of that transpired and what you think of the deal ultimately that was struck with the president stepping in with Nippon.
Look, we felt like we had a great plan there, and we stepped aside. I mean, I think our perspective on what happened in U.S. Steel largely it drives our perspective on why we think and why we're so confident that this merger will get approved, meaning the UNP Norfolk merger. But you look back at when we first got involved with U.S. Steel, you had a CFIUS rejecting it, Biden administration opposed to it, Trump publicly opposed to it, and then within a short period of time after we nominated and went Republican in the campaign, it started to become clear that there was a negotiation still going on, which I guess with Trump, negotiation is to be expected, but the change of heart that happened as it became clear to us, and we were invited in the White House and actually ended up going there several times during that process, which was fascinating. But it was very clear to us that if that deal could fit within the narrative of where Trump wanted to go domestically with manufacturing, with the ability to focus on, like I said, on insourcing, creating domestic jobs, creating steel jobs, protecting steel jobs. And I think he got to an outcome and a commitment that he was comfortable with. And so when we dropped out effectively of that, which we did after, sometime in April, but the reason we did is because we believed at that point that, look, we never wanted to get involved in a way to effectively kill the transaction. Our assumption was the transaction was killed. When it was clear that it wasn't, obviously we're a shareholder, we're looking to make a return like everyone else. And so I think that outcome turned out to be a great one for everyone involved. And, obviously we'll see how that happens going forward, but I think the company is really well positioned to execute.
Are you still shareholders?
No, not in the private function there. No.
Okay. You obviously invest quite a bit across the industrial sector overall. We just touched on it with reindustrialization. What is your outlook and how is it driving your investment thesis moving forward now?
Look, I think the industrials as a whole, I mean, for us, there's somewhat connectivity to our own backyard where we live and where we work. And it doesn't mean that we're only investing in localized companies, but I think that is a part of it. I mean, some of these stories we're involved with when you talk about U.S. Steel, obviously Cleveland is a long history in the steel industry. We have a lot of relationships in steel as well. And so these things really hit home for us. And Norfolk Southern started on the back of the East Palestine derailment. So, I think our touch points on industrials more relates to the fact that that's a space where we, have interacted with these types of companies or these industries for years or most of our lives here as we've lived here in the Midwest or in the Rust Belt. So I do think there's somewhat of a competitive advantage for us as an investor with these types of opportunities that are often overlooked. And so I like the industrial space. I think, the economy it remains strong or gets better. That's a space that will will outperform. It's obviously one that is a significant emphasis on this particular administration, which is a great time for us to be involved and focused on these types of opportunities. And obviously that's part of the reason we're excited about the long-term prospects on Union Pacific as well.
So in light of that, what's next for Ancora?
Well, we'll see if it's whether it's CSX or some other opportunities. We do have a few things that are actually in the hopper right now. It's in the summer months, so this is usually sort of off season for an activist. But we are working on the next ones as we go forward, and we're excited to tell you about them as we do. But this rail space is one that it's been good to us, and I still think there's a lot of exciting things to happen there as well.
Okay, well, with that cliffhanger, we'll finish the conversation. Jim Chadwick of Ancora, thank you so much.